There's a lot of great news recently while China reopens with updated COVID-19 policy. The U.S. Public Company Accounting Oversight Board settles accounting issues with China American Depository Receipt, and during the most recent Central Economic Work Conference, the commitment to get economy back on track was reaffirmed by China's central government. What the expectation is that economy will gradually pick up in the first half of next year in China, and particularly in the second quarter, the resumption of work and normal life will be accelerated, and economic vitality will return at an accelerated pace. We have already seen signs of recovery. In November, industrial production rose by 2.2%, and fixed asset investments grew by 5.3% in the January to November period. With restrictions eased, on-site dining and travel are recovering rapidly. The most obvious indicators are probably the share prices of Meituan and Trip.com, which have bounced by around 30% or more from its lowest point already. Well, in the first half of the month, the international air route offered by the Chinese domestic airline increased by 145% from last year and 36% from last month. Well, the film industry is also recovering rapidly. 80% of the total 9,800 cinemas in China have resumed operation, with Avatar 2 recording 500 million yuan in the Chinese box office already, according to online movie ticketing platform Maoyan Professional. The road to recovery, however, will still be bumpy. The recent retail sales figures are still soft and fell by 5.9% in November from a year earlier. The surveyed urban jobless rate was still relatively high at 5.7% last month. During the past 3 years, the Chinese economy experienced a structural change during the pandemic. Such changes cooled the real estate, brought more stringent controls to the platform economy, and facilitated new energy sector growth. Going forward, if the country were to record a widely expected 5.5% GDP growth in 2023, China will need confidence to be further restored among consumers and entrepreneurs, and consistent, stable policy guidance is a prerequisite. While China's economic fundamentals, resilience, great potential, vitality, and sustainable long-term growth remain unchanged, now with the compounding effects of reopening and more supportive fiscal and monetary policies, the economy will be better supported in 2023.